Welcome to the chat where the deals get done. Real estate tips and a whole lot of fun. Think different, achieve your goals. Real estate simplified, that's how we roll.
Hey there. All right. Mike Cruz, owner broker of Reside Real Estate, and I'm here with Brandon Rizik.
What's up, Mike? Good morning. How are you?
Good morning. Doing great.
Welcome back. Welcome
Yes. With Allied Mortgage,
back. Yes, sir.
which it's going to be all about you today. We're talking about getting mortgages. And
I'll do my best.
nobody knows the business as good as you.
Thank you.
So
Thank you.
we know that. Quick little market update. Not so much the market here in Las Vegas per se, but hot off the presses this morning, just read that Goldman Sachs has released new figures on what they expect the national real estate market to do over the next year. For 2025, a 0.2% increase in prices, and for 2026, they're predicting a 0.8% increase in prices. So basically that means, compared to what we're used to, that's going to be a pretty flat market.
Yeah, we're used to an average, if I'm not mistaken. Mike, you might know better, but I think it's about 3-4% appreciation.
Yeah, minimum of 3%. It's not a decrease, so we don't foresee prices going down. But also, if you've been in your home for a year or 2 years, you may not see a whole lot of equity over the next couple years.
Well,
but
I'm sorry.
you're still doing okay.
Well, and I look at it this way too: is number one, a lot of people are predicting prices to go down, so they're
Right.
saying on a national scale that we're going to, even though it might be
Right.
somewhat flat, we're still not going
Right.
down. And number two is, as I look at that, nationally is a much different market than the Las
Well,
Vegas market.
Right, and there
itself.
are proven areas where prices are going down, such as Austin, Texas, as well as a few cities
Phoenix,
in
I
Florida.
heard.
Phoenix prices are also dropping. A lot of
Florida, yeah, a lot of. I heard it's a lot of Florida.
yeah, a
prices
lot
are
of
going down.
Florida. I was actually just talking to somebody this morning about condos in Florida. They're tough to move right now.
Yeah.
So, yeah, it's which means other markets are going to have some decent increases.
Yeah.
So
I
we'll
think we're
just
still
have to
holding
play it
strong.
out. Yeah, no, here in Las Vegas, things are looking good. Inventory's still steady and all that good stuff.
Cool. On the rate side, I mean, it's been pretty flat. We have a quiet week this week. Here we are, mid-July, 2025. We're going to be pretty quiet. We're still in the Fed White House battle, so to say, and we'll see what happens. But everything again is pointing towards rate cuts soon. And but right now, there's no major news coming out this week. So I mean, we're just been steadily
right.
flat. And you know what? We're still locking on conventional loans mid-sixes. I mean, we're doing okay. Government loans, you're in the low sixes, maybe a high fives if you've got some points in there. So, I mean, they're not awful by any means. And so today and this time, I think with the rates being the way they are and some sellers wanting to sell, it's a really good time and good market as a buyer to take advantage of rate buy downs and contributions. I think it's a great time.
Awesome.
So,
That lets us lead right into today's podcast. We know that you can get mortgages from all different places. So, Brandon, if you could, let's break it down a little bit and explain the different types of places, banks, credit unions to get a mortgage and what the differences are.
well, okay. So there are many different ways, obviously, or institutions that will practice differently, obviously, for the same goal to get a mortgage, right?
Right.
So I'll put credit unions and big banks kind of in the same block. You've got your, I call them online lenders, which we'll get into that. And then you have your independent mortgage bankers, which is essentially what I am, and you have brokers as well, which, a lot of independent mortgage bankers are also act as brokers. It's kind of a hybrid. Can be a hybrid, or you can be one or the other. But to go backwards, why would somebody choose one of them? Why would a client that comes, start with you, Mike, how's that conversation go?
A lot of times it starts with, I spoke to my bank and they're not real thrilled with the rates sometimes, and other times they are. But I know from my standpoint, when I've worked with clients that utilize the big banks,
Here comes the real life.
they're-
That's okay. Real life
they
real estate.
don't always perform the way an independent mortgage broker banker does, or it can be different.
You know, so to break it down, what I think the biggest differences are, you know, let's start with your major banks and your credit unions. Okay, so your major banks, generally people, you know, in the past it was always a thing. Hey, you kept your money there; they were going to take care of you, maybe give you a good deal because you're loyal to them. In today's world, you know, I'll tell you, probably 98% of the time, it really doesn't matter.
Right.
Today, a lot of banks, major banks, have pulled out of the mortgage business or outsource it.
Yeah.
But you know, they're very good. They offer decent rates. The problem with them, in my opinion, is they have a lending box that's very small.
Right.
And what I mean by that is their box, you know, and their guidelines and what they'll allow and what they won't allow and how to qualify somebody. They don't really get creative.
Okay.
You're either kind of in their box or not. But I've seen them close on time, I've seen them close fast, and I've also seen them take a very long time. The problem with them is that if you try to get a hold of them, you're stuck to the 9 to 5 business hours, no weekends. You can't ask the questions unless they're in the office.
Right.
And the realtors need to check on the status and stuff. They're really not going to, most of the time from my experience, they don't really reply to you.
Well, and my experience too has been when client has a question, they call the loan officer at the big bank and they get a little bit of a runaround. They say, well, I don't have it on my desk, my processor has it. That person might be sitting here in Las Vegas, the loan officer, but the processor
Could be in Virginia.
exactly
Could be anywhere.
Yeah.
And I've seen them outsourced to Manila, Philippines, or India, wherever
Right.
it is. So it's not always a bad thing. It's not always a good thing. It's personal preference. But I think in today's world, I think consumers need a better attention.
Okay, right.
I will say one of the biggest benefits of a major bank, or especially a credit union, is their credit unions, especially their rates are generally better.
Yeah.
They're not necessarily tied to what the market is in rates, like the mortgage-backed securities, because they probably are going to keep the loan, hold the loan themselves, determine their own interest rate. They're lending their own money. So like sometimes they'll run these specials where they're offering this awesome interest rate that nobody can touch.
Right.
You know, or a guy like me, an independent mortgage banker or a broker, would have a hard time matching. And that's where they become really good. But you're still dealing with all the downside to that. And if you have a short closing time frame and you need service, or
Yeah.
you have somebody that's outside of their little box, I mean, you can offer whatever rate you want.
Right.
But if they can't perform, they can't perform.
Right.
So that would be one of the biggest downsides to them. Let's jump to the online lenders, because I think they're similar, but what they are is they don't have a big institution. They are, I call them online lenders because they pay somebody very minimally to do the loan, and you end up basically doing everything online. Everything is online. It's very hard to even get somebody on the phone or communicate with them.
Right.
And I don't know the skill level behind them usually is not as, I don't want to bash people, but it's not as good.
Right.
You know,
My experience has been with clients that have used them is the service definitely is not as personable.
correct.
You can usually get a hold of somebody, but they may not be versed in your entire file
Yes.
because it's very compartmentalized.
Oh, yeah.
Each process.
You get shifted to probably 10 different people in the
yeah,
process.
yeah. Who
literally.
you start with is not who you finish with.
Correct.
Yeah.
And the reason that they're a good thing is generally they offer the best rates, the
Right.
best price out there, because they're not paying, they don't have the operations staff that an institution would,
Right.
which is good, but when you're under pressure and your obligation and stuff, it's not always good.
Right.
The best rate isn't always the best loan,
Right.
if that makes sense.
Well, I was just going to say one of the first transactions I had a client use one of the online lenders. The lack of personal skills had a detrimental effect because the appraisal came in $300 short.
$300.
$300.
I don't know how, between you and I don't know how
Well,
an appraiser can be that good to determine
right.
$300 worth of value.
Value, exactly. So the client, they had to come out an extra $300 on their close of escrow.
If I was a seller, I would laugh at that, to be quite
Well-
honest with you. Even the buyer, I'd be like, really?
Well, that was kind of everybody's attitude with it.
Yeah, absolutely.
But come on.
Yeah, I agree.
A little
And-
ridiculous.
And I bet you, in most cases, that loan officer probably didn't even realize it. Didn't even know
Well,
the
right.
difference.
Yeah, no, it's strictly bean counters, nuts and bolts counting type of stuff there. There's no real human contact, for lack of a better term. Yeah.
Well, and that brings me to brokers. Okay, so you can, a lot of people, the hashtag brokers are better, or, I always go to a broker because they shop you around to so many lenders, and that's what brokers do. They are essentially a middleman.
Right.
As a loan officer. But what they have to do is shop you to so many banks, whoever they work with, whoever's offering the better price. But, the difference is that, they might have a good price like the online lender, but that bank might, excuse my language, suck. I mean, they may
Right.
have overlay upon overlay to their guidelines. They might put you through the ringer. And my beef with brokering is you lose control over your file as a loan officer.
Right. No, and I was going to say, as the agent, I'm talking to you, the broker, to get the loan done, but you have no control over it.
No, none. You can't
And-
control the turn times. You can't control anything.
Right. There's a middleman in there that doesn't need to be there.
Right. All you're doing as the broker is putting a file in front of a bunch of banks saying, here, help me close it. And, I don't want to bash them because there's a lot of good brokers out there. There's a lot of good wholesale lenders that offer great service that will grant exceptions and, help the loan officer, give the loan officer a little control. But overall, they don't have it. And they're relying on an account rep, not the underwriter direct access. They're usually relying on an account rep to get things done. And if you have a long closing, it might be good thing. If you have a short closing, again, that could be a bad thing. It depends on the loan officer too. You could have a really good loan officer that packages it up great and did their job, and now the bank doesn't need much time to do the job.
Right.
So, again, I don't want to sound like I'm bashing them.
No, and it
So-
can come down to when you're buying a home. Usually a seller wants a 30-day close if at all possible.
Yeah.
And
In
when
today's
you're
world,
in that
that's-
scenario working with a mortgage broker, they're going to ask for 40 or 45 days a lot of time because they know they can't get it done that quick.
Depending on the loan.
Right. And in today's world, when I know you as an independent mortgage broker,
Banker, yeah.
excuse me, you can close a loan a lot of times in 2 to 3 weeks.
Yeah. So why I choose to stay in the IMB world, which is independent mortgage banker world, is I am actually a hybrid. I can broker loans.
Okay.
I have both. But an independent mortgage banker, and this is why I think it's so key, is you go to a big box store bank, you go anywhere, you're a number, and they always have people just walking in the door because they have checking accounts. They offer business loans and car loans and everything. So there's people always calling.
Right.
Well, an independent mortgage banker only does mortgages. All we do is mortgage. That's all we know. We survive on mortgages. So if we don't do a good job,
Right.
we're out of business. So, and I'm not trying to sell it, but what it does is it shows that you have control over, you have to have the control over your loan. I have a direct closer. I have a direct underwriter. I have a direct processor. I employ my processors. All the guidelines we do, everything is all direct to me as the loan officer.
Right.
And I can pick up the phone and say, I need to close this fast. And I can get it done fast
Right.
because you just have that kind of control when you work for that company. So, and then if it's a better price out there or there's a program that we just don't have, I have the ability to broker. So that to me is the way to go. I think if you're a consumer out there, I would highly consider that, at least one option being an IMB, independent mortgage banker, because usually they are the ones with the control, and if, in my opinion, the loan officers need to have a little more skill. So, like, say you're a self-employed borrower, you might write off everything on your taxes, where
Right.
a credit union is going to look at you and say, I can't qualify you.
Yeah.
But, I know that there's 3 other self-employed programs out there
Right.
that I can qualify you on. And that's my job, and that's why you would go to somebody like me for the experience.
Right. So the experience, personal service, and your team is your team. You're not chalking it off to somebody in a different department.
No. I know how my processor processes.
Yeah.
I know how my underwrites. I know what to expect. I know how my closer is going to close that loan, when we come time to funding and documents and all that stuff. So, I mean, you establish relationships. They know how I work, and I know how they work.
Right.
So when we get a loan in and we do the loan, everybody's on the same page at all times. And I think that's really important. So.
Right. So clients, they always want the best deal. In your opinion, what should they do to get that best deal?
Well, I always recommend you get, maybe 2 quotes.
Okay.
I know they preach 3, if
Right.
I'm not mistaken, to you
usually,
guys.
yeah.
3 is okay. I think you're overdoing it at 3, to be honest with you. I think if you just went to your bank and somebody like a hybrid or broker or an independent mortgage banker or somebody who does both, I think if you compared those, I think that you're safe, because generally the brokers are, pricing it around.
Right.
I'm a big fan of 2 quotes, 3 quotes. You start going over 3, you're overdoing it, guys. You're gonna make your life hell.
Right.
Because everybody's offering a little bit here, a little bit there, a little different. So I don't think that it's just too confusing. The best deal, Mike, doesn't always mean the lowest rate or the less
Well,
fees.
I was going to say, and I'm going to interject something here. When you are shopping for a mortgage and you have, say, 3 quotes from the big bank, the independent mortgage banker, and the online company, and they're all within, say, 0.02% interest of each other, from the real estate transaction end of it, I'm going to tell you, go with the independent mortgage banker, and not because I have one sitting next to me right now. The real reason is because if the big bank and the online bank that are based out of who knows where in some other state, they're a lot of times they just can't close on time. And it can end up causing you a penalty on your home because that seller expects you to close on time. When you don't close on time, if they allow you to continue with the transaction, which in the current market, chances are they will, there's going to be some type of penalty to you. And they can charge you $100 a day. And
or it's not even just close on time. Your appraisal needs to be back on time.
Right.
Your loan needs final approval on
Right.
time, which is
Everything.
contingency dates in the contract where you could be having your earnest money or things at risk, right?
Right.
So, I I appreciate that, but you're right. You're right. If they're all close, go where you're going to get the service, and
Right.
that's where I was going with that. The lowest fees and the lowest rate isn't always what you need. Sometimes you need experience. You need service. People don't. Service is an underestimated thing in today's world. When you need attention, you need it now.
Yeah.
Especially in this market, if you have to close in 3 weeks, or if it's a seller's market and you have no timeline, you need service. So, as long as that broker, independent mortgage banker, or whomever you're going with is competitive to the market, you always want to stay as local as you can with the personal tie as much as you can.
right.
And that's how I've survived in this industry, and that's how I will survive, and that's how I've been successful.
Right.
To be honest with you, it's the personal touch, the service, and the comfort level people have
Well,
when they speak to us.
And your business, like mine, a lot of it's repetitive.
Yeah.
People coming back to you for their next mortgage, their investment home, whatever the case may be.
Right. Absolutely.
So no, it's important. So I guess that.
And here's another thing. If you get another quote that's even better somewhere else, bring it to the person you like the most.
Right.
Like if you liked your IMB, independent mortgage banker, the most because you got the most education out of it or the most info, and you need best service, but hey, this other lender's just beating them big time,
Right.
bring it to us.
Yeah.
And we might be able to get approval from our company to kind of, I don't want to say match or come closer.
Right.
Sometimes match or sometimes come closer where you feel like you're not getting ripped off by getting the best service.
Yeah.
So recommend that to everybody. Absolutely.
Definitely. No, and we have a couple stories where the big banks have gone wrong. I had an experience with a client of mine. This was probably 7 or 8 years ago now. He banked with one of the big banks. went in to get his mortgage. He had enough cash. He was looking at a $350,000 home at the time, and he had enough cash in the bank to pay for the house cash. But he didn't want to spend his cash.
And it was in the institution that he was going to.
It was in the in the
That's a
same
big deal.
bank.
Yeah.
His
You would
money
think
was
they're
in
gonna take care of you.
an account there, so they physically saw on their own computers that he had money in his account to pay for this house. Well, because he was self-employed and his business had not been up and running for what they deemed long enough, they wouldn't give him the mortgage. And this was after we did the appraisal and everything already. And it was almost last minute. Luckily, we did have a loan contingency within the contract. So he ended up canceling. And all I can say is he showed them about 2.5 years later, he bought a home twice the price, paid cash for it because at that point, he literally had twice as much cash as what he needed. He bought a home in the same neighborhood just down the street and didn't need the mortgage.
See, this goes
So-
back to what I said earlier. This exact scenario. So he went to his bank, the major bank. They had a box this big.
Yeah.
Okay. Now, if he would have went to a guy like us or myself, or even just a broker, where we have the knowledge, where we have different programs, we have a bigger parameter of guidelines, lending programs, and places to send the loan to.
Right.
Because this is all we do. Again, this is all
Yes.
we care about because that's how we survive. So we have to have these programs, otherwise we would be out of business. So if this man went to us, I guarantee you we would have had a loan. It would have just been a different program.
Right.
So that's a prime example as to why a big bank might be bad.
Yeah.
You know.
No, and ultimately, that bank lost all his business
There you go.
because, he ended up moving to a different bank.
Well, in your office, we had one recently. You know, one of his real estate agents that he works very close with, and she sent us the loan, and it was a great loan. We pre-approved the client,
Right.
and the client was solid. Everything was good, but she got this credit union deal that we just couldn't touch. I mean, she brought it back to us. She said, hey, Brandon, can you come close to this? And honestly, it was one of those things where it was a rate that didn't exist out there. And I couldn't match it. And we just said, I'm sorry, I can't match it. It's a good deal. Go for it.
Right.
And, she did. And rightfully so. She should have. She had a great loan. Well, here we are 30 days later at the closing table. She was supposed to be closing. The credit union just said, sorry, I'm not going to do your loan.
Right.
She had an issue with the credit union, I don't know, 15 years before
Yeah,
or something like that?
it was a very long time ago that she had an account that went bad for whatever reason, and they basically said either you pay this old account,
I mean, it was like 10, 20 years
or we don't give
before
you the
this.
mortgage.
I mean, it was ridiculous. They
Right.
wrote off this debt, and they could get their money back with the mortgage, right?
Right.
And then they
Well,
did it.
they were going to get the money back tenfold, really, over the years.
But they strong arm. Exactly,
Yeah.
that's what I mean. And then they strong arm you at closing, and she just had enough and ended up coming back to us, and we closed the loan in 11, 12 days. I mean, it was fast.
Yeah.
So-
No, I know the client appreciated you and the agents on both sides. I really appreciate you getting that loan done very quickly.
Well, but that's our job.
Yeah.
That's why we have a business, but that just goes to show again, if you can be offered the best rate all you want, if they can't perform or they don't perform, it
Right.
doesn't mean anything.
Right.
As long as you are within the market range of rates, you stay where you're going to get the service.
Yeah.
Well, let's take a quick break, Mike. I know you have a listing that you want to
Yes,
discuss.
have a brand new listing located in Inspirata. Single-story home, 2170 square feet, 3 bedrooms plus a den, fixed up very nicely, nice and modern. Kitchen has a big island. The backyard is beautifully landscaped, and it does not back up to another home.
Oh, that's nice.
So,
Nice and private.
yeah, great home. It's a street behind, but it's near an intersection, so there's no high volume of traffic, loud trucks, or anything like that. And this home, it's on the market for $619,000 on a cul-de-sac also, I should say at the end of the cul-de-sac. So if you are looking for a home in the Inspirata area, which is West Henderson, fast growing, this is a great property.
Good size too, 3 bedrooms with that office. The office is a nice feature. If you needed to, you might be able to convert it to a bedroom. I don't
Yes, yeah, it could be a small bedroom, 4th bedroom, and great laundry room. Garage is ready to go. Just come check this house out.
Absolutely, man. Inspirada is an up-and-coming great area. One of the fastest growing areas in Henderson. That's your area. You live
Right.
there.
Yeah, I
mean,
do.
let's put it this way: the guy lives there, so he
Yeah.
loves Inspirada. It's a wonderful neighborhood, so he believes in what he's selling.
Community
there. I'll put it that
parks,
way.
pools, everything you need in the neighborhood.
Absolutely.
So-
man. Talk about believing what you're
Yeah.
selling. So,
But I am going to, somewhat similar to what we've been talking about, though, is something I've run into recently. We are in a steady market. Home sellers, I'm talking to you. When you have a home for sale, make sure the home's presentable. And also, if you think you might be overpriced because you've been on the market a while, you're probably overpriced. You need to remember, although the numbers might say one thing, your home is only worth what somebody's willing to pay for it.
I think that's really important, Mike. People don't realize
Seeing
that.
this way too much lately, and I'm going to say greedy sellers. They think they're holding out because their house is their house and it's worth more than the house down the street. And I'm sorry, but it's not. So sellers,
Be realistic.
be real. And if you think your home isn't worth what you think it's worth, it probably isn't.
Well, and to go through this, I get asked this question a lot on the lending side because we're the ones
Yeah.
that order the appraisal.
Right.
And I think people put too much stock in an appraisal.
Yes.
And I know I sound crazy saying this, but an appraiser's job is to justify what the buyer's willing to pay for its value.
Right.
They're
Right.
not determining a value. They're taking
Yeah.
what you're offering and what the market's doing and saying, okay, this is good.
Right.
They're not saying this is worth this. They don't, nobody can physically do that.
Yeah.
It's worth what you're willing to pay for, and their job is to justify it.
Exactly. And while it is a professional opinion,
Right.
it's still only one person's opinion.
You get 2 appraisals, 2 different values. It's
Exactly.
never going to be the same.
Yeah.
100%. So absolutely.
Just something to keep in mind when you're selling your home.
And if you're wanting top dollar, this is Mike's department. He's the listing agent here. But if you want top dollar, and if I'm a buyer walking in, it better be clean and pristine.
Right.
If it's messy, I'm not going to see top dollar in my eyes. I'm a consumer. And anybody else wouldn't.
As an agent, I'm going to throw something in there above clean and pristine. It needs to smell good, guys. You walk into a house and it stinks, turning around, walking out, because
Yeah.
they already saw what it looks like. They saw the pictures. It needs to smell good.
Yeah, you're right. Or at least just fresh,
So,
right?
yeah.
Right.
So, get off my soapbox here.
Hey, man.
Like, subscribe, share this. Please send it out, share it on your social media. We appreciate it and look forward to seeing you guys on the next one.
Absolutely. And ask your realtor, ask your banker about different quotes, about getting your loan and seeing how to shop it and, where to shop it with. We all have suggestions, and, mostly your real estate agent is the one that is going to kind of probably recommend some of their relationships. They are the ones that will direct you probably to the better people and that you may want to work with.
Yeah, I
So,
didn't meet Brandon out on the sidewalk and ask him if he wanted to do a podcast.
That's a true story.
We have a relationship going back like 12 years now.
Yeah, well, no. Yeah, maybe. I don't know. But
It's a long time.
it's a long time. And you know what? We met each other doing a transaction by coincidence. So
No, it wasn't coincidence. I was told that if I wanted to get my client's offer accepted, my client needed to use you because you could close the loan.
That's right. There you
So
go. Thank you.
That's the way it works.
Well,
Thanks,
thank you,
guys.
Thank you, guys. Till next week.
right.
Welcome